I paid off my mortgage last month, 30 years. Bank sent the deed over. Congratulations, it's yours, free and clear. 2 weeks later, the county tax bill shows up, $9,400. And that's not one-time thing. That's every year until I die. Stop paying it and eventually they take the house. The one I just spent 3 decades buying. So what actually changed here? For 30 years, I paid the bank so I could live in my own house. Now I pay the county so I can live in my own house. Different envelope, same arrangement. Nobody ever finishes paying for a home. You just run out of banks. I've always said that the mortgage industry, as much as it is one of the major wealth creators for people who have created wealth over the past 5, 6, 7 decades, is something that if you have to get into in this current market, you have to be very careful. You have to be very careful, not because you cannot afford $9,400 a year for county tax, or you cannot afford the management of the house, but you need to understand the math of what you're doing. Now, let me just show you the comment somebody put under this post. Somebody said, I know some seniors, that's people who are elderly, who are done with their working life, that has lost their home after a spouse died because they could no longer pay the taxes. It's pure evil. You see, stories like this don't really make the news because they are sent through letters in your mail, information reaches you through your realtor or through the county, and so you don't really hear people share a lot of these things. But these things are happening. People are buying mortgages, and at a certain point in the future, they find out that they cannot afford the payments. The management of the house is becoming a burden, and so they try to sell it off, and then they realize they cannot sell it off. And it's not like the regular loan that you take where somebody can just maybe destroy your credit score or take back the car or something. It's not easy for you to just let go of your house, even if you can't pay. So it's a 30-year period. You're supposed to be making consistent payments. And so if you can afford it, of course, go for it. But affording it is not just the mortgage payment. Affording it is both the mortgage payment and every other thing that comes with the house, like maintenance, like possible increase in your mortgage payments over time. And even if you are buying the house because you are believing that the house is going to add equity in the future, you cannot bank on that as a reason for buying the house. Yes, the house will get equity, possibly. But if it doesn't, what's your plan? And even if it does, and you want to sell the house or you want to loan against the house, you need to also make a plan for how you're going to pay back the loans, because now you have 2 loans. You have the mortgage loan and you have a home equity line of credit. It's important for people to understand how these things work. We live in a country where it is very simple to be able to walk on this path because there are people who are funding the advertisements for these systems. But then you have to be careful making your financial decision based on your personal experience, your personal situation, and the consistency of your income.